Hello, everyone from Bay Area. Thank you for joining Jamming Entertainment today for a discussion about real estate during the COVID-19 pandemic. My name is Bushra Haq, and I'm excited to be your host for this program. A little about myself. I am a Bay Area native for over 2 decades, an engineer by trade, and most of our knowledge of real estate comes down uh, to knowing Bay Area homes prices are just outrageously high. Like many of the viewers today, I hope to learn more about the real estate industry, especially during this COVID-19 pandemic, through today's panel. Joining us shortly, I have two real estate icons, Tasrina Zaman and Tiku Rahman. Tasrina Zaman is a realtor for Bay Area Homes, and Tiku Rahman is the vice president of CalCoast Financial Corporation. Thank you for joining us today, Tasrina and Tiku. So I'm going to start with Tasrina. Tasrina, if you can just give us a brief introduction about yourself, that will be awesome.
Thank you. First of all, I would like to thank Jamming Entertainment for arranging this session. And about me, I've been living in Bay Area for quite some time now, and I've been in real estate for the last 3 years. And I work with a team who's been doing this in Santa Clara County for 15 years. So I help communities, a Bangladeshi community here with their real estate needs, and I'm glad I'm here talking to you guys today.
That's great. Okay, next, Tiku Rahman, if you can briefly say about yourself.
My name is Tiku Rahman. I've been doing this mortgage financing since 2003. So it's been, 17, 18 years. So I'm with CalCoast Financial for all my finance life. Now I'm the vice president of the company. So just trying to help out people I've been doing loans, like a lot of people from Bangladesh, India, or Desi people. The loan is done by me. So you have any kind of question, concern, call me anytime. My phone number, most of the people knows it. So we'll answer whatever the right answer is. So that way it helps you make the decision correct.
Thank you so much, Tiku. Those were great introduction from our panelists today. So our কথা না বাড়িয়ে, let's start with the main topics. I think viewers are waiting eagerly to hear from the both of you. What it looks like today. I know that COVID-19 আমাদের সবাই লাইফে কিছু না কিছু ভাবে এফেক্ট হয়েছে, every industry. তো আমরা আজকে যেটা জানতে চাইবো রিয়েল এস্টেটে অ্যাকচুয়ালি কিভাবে এটা এফেক্ট হচ্ছে এবং আমরা what is the impact of the pandemic on the real estate market, especially in Silicon Valley. So this question is for Tasrina.
Okay. So basically, আমরা যেটা দেখি in Silicon Valley market actually could be unique compared to the rest of US real estate market. I would like to mention that first, because when I deal with first-time home buyers, I usually have to explain that how is it different. আমাদের এখানে যেটা দেখা যায় মানে আপনার if you consider demand and supply, so most of the time demand is a lot higher than the supply of the inventory in the market. মানে বাসা যেরকম সেলের জন্য আসে তার থেকে অনেক বেশি বায়ার্স থাকে. So in that way it's very unique. So pandemic-এর যেটা মানে মেইন এটা আসে যে আমাদের কি ইফেক্ট আসে, right? So long-term effect would be, we don't know what the long-term effect of pandemic is, but some factor that seems to be considered is before the pandemic even started, Government থেকে Feds বা Congress, they were taking some steps. One of the steps was to a year first year interest rate was reduced. আর প্যান্ডামিক শুরু হওয়ার পর যেটা আমরা দেখলাম যে কংগ্রেস বা Fed, they have reduced the interest rate further and also stimulus package দিচ্ছে আমাদের মানে to help people and another thing is supply of money has increased in the market. Given taking all this into consideration, we see that market কিছুটা stable. They're trying to hold back the recession. So that impact is there of the pandemic. Market is still stable. The prices of the homes are holding up. If you look at from the seller's perspective, একটা seller এখন আগে বাসা প্যান্ডামিকের আগে যদি সেল করতে চাচ্ছিল, এখন হয়তো বা they're just holding back to see the shelter in place চলে গেলে আবার সেল করবে. In that way also আপনার হাউজিং সাপ্লাইটা কম আছে. আবার from a buyer's perspective, there are two kinds of buyers in the market right now. There are some buyers who wants to take advantage of this situation given the low interest rate. They're thinking that prices are still lower, so they want to buy the house before the prices pick up. And also there is a group of buyers who are holding back from buying because they feel like maybe things are going to change. They don't know what the job situation is going to be. They don't know what their visa status is going to be. So that factor also plays in. So if you take these two factors into consideration, we see the market, the home values are holding still.
Still, that's awesome. My next question is for Tiku. How is the interest rate now, Tiku?
So right now, I think everybody knows that interest is really low.
Is it better?
Huge. I don't think like I ever seen this kind of rate for the last 17, 18 years. I didn't
Why
see.
is that? Is it due to the COVID-19?
Yes, exactly. That's what it is. Interest rate, it depends on mortgage bond and stock bond, right? So if you are talking about on the finance, like so they kept the interest rate low. So the interest rate is really, really low. It's not only buyers, it's for the people who has existing home. They are into refinancing big time. Because anybody has houses, it doesn't matter pretty much what rate you have, you can take advantage of the interest rate. If you do not take it, then I would say it's not a wise decision not to take that advantage. This is the time. So anybody has, even in my own house, I had a very good interest rate. Now I'm refinancing my houses. Like I have a couple of houses. So I'm refinancing like my houses also. I know like this is something I won't find it. Now, a lot of speculation in the market, like, oh, it might go down more. Okay, yeah, it might go down more. But I'm living on what I'm getting today. So today, like I'm getting advantage of getting the lowest rates, I will take it. So in the finance market, there's another thing a lot of people doesn't know. Like most of the loan doesn't have any prepayment penalty. So if it goes down later on, you can take it again. And most of the times in our Desi people, in our mentality where we come from, it's very important to do any loan with no cost. So if it doesn't cost you anything and your rate is lower, why not? What you are losing? Only thing you are sending a couple emails to get your paperwork and your refinance is done by us. So it is the time to take the
In terms of, since you are talking about refinance, I have a question. Say, for example, people took 30 years loan, right? And then paid like 1 or 2 years.
Right.
And then now, since you are saying, you're advising this is the time to refinance, and if that person decides to do refinance, how does it work? Does he have to start from 30 years, or what's the process? How can you explain that?
You have to start with 30 years for sure. Again, 30 years.
So what's going to happen the 2 years he paid?
Yes, that's what it is. So let's say when you are making a payment of, let's say, $3,000 a payment,
Mhm.
so there maybe 300 goes to the principal, 300 goes to the interest, and 700 goes to the principal. So whatever money you paid to the principal, your principal went down,
Mhm.
right? So
Uh-huh.
when you are refinancing later on, you are refinancing based on the loan amount you have today.
Okay.
So basically, when you are doing it with a lower interest rate,
Mhm.
so basically you are paying that payment, you are paying less interest because you are refinancing with a lower interest rate,
Okay.
and your principal went down already. So from there, you can do 29 years loan. Also, there's one lender, they offer like 29 years fixed loan.
Mhm.
So that's one of the things. The other thing is like if you think, okay, I'm gonna, let's say you refinanced, your payment goes down, let's say $300, $200, it went down,
Okay.
$200,
Okay.
it went down. And since you are taking the lower interest rate, so
Mhm.
you are making more money to the principal. So maybe your saving is almost $300.
Okay.
Now, if you keep making the same payment, forget about you refinanced.
Mhm.
The payment was $3,000. Now your payment is $2,300.
Okay.
But you keep making $3,000 payment. If you keep doing it, maybe you will be paid up by 23 years or 25 years. But if you would pay the same payment, you would pay like 28 years.
Yeah. Okay.
So basically, that's not the equation. Like even if you refinance
Uh-huh.
and you keep making the same payment, you will pay up faster than the loan you have right now.
Great. Okay. Thank
You know,
you.
people forget about arm and journey lower payment also.
That's
Right?
true.
So keep making the
That's
same
true.
payment, because if you do not refinance, you keep making that $3,000 payment
That's
next
true.
28 years.
Okay. Awesome. Thank you.
Yes.
Next, I have a question for Tasrina. What are the chances that housing market might crash this year due to the pandemic? Do you see any sign or anything, or it will be stable, or it will go higher? I mean, what is the scenario?
So, like I said, this is a question we face every day because we are all wondering, like, what's going to happen, right?
Uh-huh.
So, housing market crash is also related to the economy. So, like I said, like what feds are doing, what the government is doing to hold everything stable so that the impact of recession can be lowered. Looking at that, we don't think that the prices are gonna significantly it's not gonna go down that much, the housing market prices, especially in the area. Like I said, the demand and supply factor comes in also. So, in keeping these factors in consideration, um, the chances of any kind of major crash is not that likely.
As
I
a
want to add something with Tasrina.
Sure, sure. Go ahead,
Let
please.
me just, a lot of people don't get it. You know, people in Bay Area, they saw 2006, 7,
Yes,
8.
the crash.
They are scared, like they are scared of, like, what's gonna happen if the value goes down like crazy, crazy, crazy. But this you have to think about, like, why 2006, 7, 8 there is a crash in the market,
Uh-huh.
because there was a loan called a stated loan. Stated loan is people who didn't have income.
Mm-hmm.
They stated like they have a lot of income. That's how the loan funded. So in reality, and everybody start buying houses with a stated income, and house price keep going up because demand and supply.
Uh-huh.
So once everybody understood that game properly, or so everybody is doing it, then what happened? Then the market actually crashed because they cannot make the payment. They took the cash out, everything. Their loan amount is, then their payment was $4,000, let's say.
Mm-hmm.
Husband and wife together, they made maybe $5,000. So basically, once the market they stopped it. They start going down,
Mm-hmm.
and everybody leave their house because they think, like, it doesn't make sense to pay this house. and they cannot afford it either.
Mhm.
But right now, after that situation, any loan is funding, they can afford their house. The finance sector is very strict about it. If somebody is not qualified to make the payment, there is no stated loan. There is some state loan, that's a different story. Because that time it was 100% stated loan. Now there is some state loan with a very higher interest rate. The down payment is 35%, 30 to 35%. So nobody is not leaving the house. But
Okay.
before,
Mhm.
everybody thought like, I cannot even afford the payment. The house doesn't worth that much. Why I will keep the house? So everybody start leaving the house. Okay,
Okay.
let it go, let it go. But in generally, whoever has a house,
Uh-huh.
if you can afford the payment, the house is not only house. House is a lot of your memories, your kids' memories. There's a lot of things you do in the house. You love your house. Nobody doesn't want to let it go. If if you can afford the house. So that time people couldn't afford the payment because the income they have, that is not realistic income. So they had to let it go. So that's not going to happen, trust me, because there is no loan like this. Nobody is not leaving their house because they can afford the payment. So they're going to keep the house. It doesn't matter, it goes up, it goes down. Like me, I kept my house. I bought the house, then house went half. Whatever I paid, the house price was half. But I didn't let it go because I could afford the payment. But it didn't make sense for me to keep the house. But I kept it. As everybody is like that. Like, if they can afford the payment, they don't want to let their house go. Yeah, investment property, this and that, they let it go. So now it's not happening. So you can see price might stop for a while. It's not going up. It's not going up. It's not going up like crazy. Which, like, maybe if it goes down a little bit, it's not very noticeable. It didn't go down pretty much. Then it's going to go up again. So everybody can afford the house with their income. The house price is not going down.
I would
That's
like to
my
add one thing.
Sure. Go ahead.
We have seen like there are some corrections that has been happening for the last 2 years actually, but
Right.
it hasn't gone down significantly. Because as you know, like if the price is gonna go down even by $50,000, there are several buyers who are willing to buy it at that price. In that way, the price cannot go down a lot. Beginning of the pandemic, it was a slow market. Houses were not selling because we didn't know how to deal with it. Open houses were not being held. There were some issues. You cannot go into the house, but now everything is sorted out.
Okay.
So slowly it's picking up. But if you compare to last summer, it's less listing this year, less houses in the market, maybe 50% less than what it was last year at this time.
There is no foreclosure either.
Yes.
There's
But
no foreclosure at all. You don't see barely like any foreclosure.
that's what you explain. Like people put in 20%, 30% down.
Right.
They don't.
That's the right loan. Now the loan is right.
So
Basically.
Okay, I'll come back to you, Tiku, about the loan. I have one question for Tasrina. Can you advise for if anybody wants to buy a house, what that person needs to do? What kind of homework needs to be done before looking for housing or as a first-time buyer? If you can advise a little bit.
So as a first-time buyer, buying in Bay Area is a big step in the sense that first you have to understand how the market works.
Uh-huh.
What are the factors that can affect you? Because you will hear a lot that in Bay Area, people have to, they're a bidding war. Like any house that comes in the market, if it's a attractive house, we see about average 3 to even going up to 10 offers on one house. So you need to understand.
Still you're having that? Still it's going on in this pandemic?
Yes. If it's a good, attractive house at an entry-level price point. So as a first-time home buyer, there are 3 factors. You need to understand what is your price point. You need to figure that out, right? How much are you going to spend to buy a house?
Uh-huh.
Depending on that, a lot of things changes, right? If it's entry-level price for that particular area, suppose in Santa Clara, where I live, the average price would be 1.2 for a 3-bed, 2-bath, 1,200 square footage. That's the entry price point for this neighborhood.
Uh-huh.
Average around maybe Fremont, Union City, Milpitas, San Jose, few areas of San Jose, it could be $1 million entry point, the price.
Mm-hmm.
So for us, if you want a single family, that's a different story. If you want a townhome condo, there are these factors you need to figure out. You need to identify what is important to you. The commute is important. You don't want to commute too much from your work. Depending on these factors, everything changes. So first of all, you have to identify what is
the criteria?
the need, like where do you want the house, how big house what a big size of the house, all these factors.
Okay.
So the second thing you need to do is figure out how much you can spend. So for that, you need a very good lender to work with. Like if you have a good lender, it can make your deal. If because most of the time you have to go non-contingent to write an offer. Nobody will come and tell you, hey, to buy this house, you need to write a non-contingent offer. But having contingencies on your offer is your right. But to get into a housing area, sometimes you have to give that up. So you have to understand these factors. So if you want to do that, you have to have a good, strong lender, good credit. You have to have very good credit so that you're taking that risk and you're safe.
Okay.
So keeping all this in mind, you have to have somebody negotiating very strongly for you. Somebody who understands how it works. So that will help them even save the time and the money, to get into the market and more.
How do you choose? How do you choose, or a good realtor who can really work for the buyer, not for
Yes.
something else?
The concept here, like a lot of people in Bay Area. I get this question before the pandemic when we would host open houses. I had people come and ask me questions regarding directly asking me if I work with you. Are you going to give your whatever commission you earn? Can you give me 50% back? Can you give this person back? So that's a question very common going around. This started with Redfin coming in. Redfin agents do this, Redfin agents do that. So my point is, if I am giving out my income to you, then how do you expect me to negotiate? If I cannot negotiate for myself, how do I negotiate for you? If I'm representing you, we have to have very good networks as a realtor. So it's about relationship building with clients, with other realtors. So you have to work with an agent who has a very good knowledge about the market, of course, at the same time who has very good network of other agents who can understand what's coming to the market, what's coming soon or what's going on with that area. And I've had even in my office, we talk about it. We prefer to work with few agents. We prefer not to work with few agents, depending on how they work. The agent has to be on top of everything, be alert, be available for the buyer at every point to make the deal go through. Even for a day, you can miss out a deal. If you're late responding, you can miss out a deal because some houses come to the market within 2-3 days, it's gone.
Oh, okay.
So it happens. Even if you can face the situation like a listing comes in, they have an offer deadline, but you see that even before reaching that offer deadline, the house is sold with a great offer from somebody.
Okay.
But buyers also needs to understand that some factors are not within anybody's control, especially in our market. Like you can have a very good offer, like a house selling at $1 million, you come and offer at $1.10 million. You might still not get that house. That is not in your control because an offer can come, all cash offer at a lower price, maybe $1.50 million, and seller would go with that. Or somebody coming with a 90% down payment, 50% down payment.
Yeah. Well, I can understand that. I can relate myself because I went through that too. So like, I liked one house but didn't get it because it's overbidding or something like that, outrageous overbidding, and we didn't want to go through the overbidding. So now you are saying that still the overbidding is going on. The pandemic is not affecting anything. That's a good.
From what I see, any neighborhood with the entry level price point, it's still a very attractive market.
Mhm.
I suppose a little bit higher price point in that market, maybe those are still selling, but at a slower rate. Maybe staying in the market for a little bit longer.
Okay.
But actively, all the entry level housing market is still very strong. It's still a very strong sellers market here.
So yeah. My next question was, during this pandemic, is it a good time? Is it a buyer's market or sellers? But you said it's a seller's market, right?
Seller's market. It is definitely a seller's market. So you can ask me, is it like to answer your question, if it's a good time to sell or buy?
Right. Yeah.
So is it like some people would be comparing? Is it a better, purchasing before the pandemic, or is it better now? So, prices were lower before, and interest rates are lower right now. So, yes, it is a better market now than before the pandemic.
Okay.
But
awesome.
Selling before the pandemic was better too, because there were more homes, and homes were selling much faster for more money.
Okay. Great. Hold your thoughts. I will come back to you. I will go to Tico now. Can you tell me a little bit about what is a good credit? How do you guys, when you see an application, like a person is applying for a loan, how do you qualify that? What are, for you guys, a good credit means? Or
so basically, any loan you do, there's a three major factor. One is how much your down payment. That means your loan to value, LTV.
I'm sorry, can you explain that?
LTV, loan to value.
Okay, what's that?
LTV. Loan to value. That means, let's say you are buying a $1 million house. You are putting $200,000. So that means you are in 20% down. You are in 80% LTV.
Okay.
So the person who is on 80% LTV and somebody is putting 10% down or 15% down. So there are two different ballgame.
Okay.
So LTV is a factor, loan to value. Credit score is a factor. How's your credit score?
And how do you check that? Where do you go check it?
So we run the credit.
Okay.
We run the credit, and this interest rate is credit based too. Once you are qualified, your DTI works like debt to income ratio. It depends on how much debt you have, how much income you have. So once you are there, in that case, credit is a major. Credit, it gives you higher rate, or credit gives you lower rate. Over 780 is a good credit, best. Over 780, it doesn't matter. If you even 800, 820, it doesn't matter. Over 780, you are the best. So credit is like 780. From there, you can go to 760. Next. Then the 740, 720, 700, 680. It goes like 20, 20, 20. So let's say somebody is 659 or 759. That means his FICO, you can count it as a 740 because he didn't hit the 760 yet.
What is this FICO? Can you explain that?
FICO is like credit score. Credit score is FICO.
Okay.
FICO is credit score.
Okay.
So now, there's a lot of times, I did it personally, a lot of our people. So basically, sometimes when you run the credit, if the credit is low, you can re-score the credit high.
How? How do you do that?
It takes 5 days. This is a class we took. We know like how to fix it. There is a certain step we suggest. Okay, do this, do this, do that.
So you are saying there's a loophole, like you can fix your credit? That's what
it's
you're
not
saying?
it's legal. It's kind of like, let me tell you how it is. Let's say you have 5 credit card. So each credit card you owe money. So I said from this credit card, one credit is very like your balance and your limit is huge difference. So there's another credit card like you are close to your balance, your balance is close to your limit.
Okay.
So you gotta take some money out from there.
Okay.
Like the credit card you have low, you take some money from there,
Uh-huh.
put some money on that credit card.
Also, you are just transferring from one credit
make
card
it-
to another,
yeah.
right? That's
Yeah,
what
you can
you're
get like
suggesting.
under 30% of your limit. So your
Okay.
balance should not be more than 30%.
Okay.
There is some of the, so they kind of suggested, okay, by doing this,
Mm-hmm.
your score is gonna go 30 point up. By doing this, your credit score is gonna be go 15 point up. So it's basically you have 3 bureaus, right? Like TransUnion, Experian, it's a couple of them, right?
Okay.
So basically, you just have to know how your mid score goes up.
Okay. Do you have to wait in between the application? Like, okay, once you apply and your credit is not good enough, and you just advise them, okay, this is how you can pull your
I
credit.
would like to say refinance or purchase, either one. When I'm doing a file, so what
Mhm.
I do, like if I see something there is things can be worked down.
Uh-huh.
So we submit the file. Sometimes we submit the file, and I tell them before I lock it,
Uh-huh.
you fix your case. So by the time we are doing the file, in the meantime, the credit score goes up. So when I'm locking it, so I started with, let's say, 720 FICO.
Mhm.
By the time I'm doing it, finishing it, is FICO is 760 or 780.
Okay.
So then I can get that rate of based on 780. So I'm taking the advantage of the higher credit.
Okay, so I have one question for both of you. My question is, for example, I'm going to buy a house, right? And you are my realtor, and so I like a house. I'm going to give an offer, and then for offer, what are the processes we have? Like, for example, you have to write offer, you have to be pre-approved, and blah blah blah, right? So the time between offer and if I'm not pre-approved or I don't have the credit, then I'm going to lose that, right? The chance. So what you guys advise for those kind of scenario, like what we need to do? We need to first check our score before even we go for the housing market, or what should we do?
Yes. So let me answer that first. So in Bay Area market, when you want to buy a house and you start looking for houses and suddenly you like something,
Uh-huh.
I told you the process is so fast, you don't really have time to look for a lender at that point. So even to submit an offer, you have to have a pre-approval. And sometimes agents prefer those offers which are absolutely desktop underwritten. Maybe if I can explain better what a desktop underwriting is. So
Okay.
with a very strong pre-approval letter, those offers are taken very seriously. If you submit an offer without a pre-approval,
Uh-huh.
agent won't even look at it.
Okay, with the pre-approval, what are the guarantee that the loan will go through? That's for you, Tiku.
So let me tell you, when anybody is purchasing a house, basically before they get into market, they should know like how much he qualified for. Otherwise, it's wasting his time and the realtor's time.
Okay.
So, and most of the times, what happens, like most of the buyer, they
Uh-huh.
start looking at so many nice houses, but which they are not qualifying.
Okay.
They are not qualified for that house. So they are looking for, let's say, $1 million house. So the income he has, he only get qualified for $700.
I would like to add one point. They could be even qualified for more, but they don't know. That's the other
They
secret.
don't know. So that way, like,
How do you know that? I mean, as for example, as myself as a buyer, I will not know. So
that's why it's my job, actually. That job come to me. So
Okay.
I will run the credit. I will see the income. I will see in the credit report how much your, like how many credit card you have, or what's your debt. So all those things I will check it out. So I'll
Okay.
checking out, then I will give you the highest. Let's say I say, what is your down payment? I'm gonna say, hey, you are good up to $1.5 million.
Mm-hmm.
If you put 20% down, right? Then you can decide, no, I don't need that big house. I just need $1 million house. But sometimes the other way it goes, somebody is looking for the $1 million house, but they are qualified for only $800,000. Then they get like a little frustrated, like, oh, the house I looked at Before, oh no, I didn't like it. And let's say if Tasrina is the realtor, he's looking for all the $1 million house. Later on, after a month, Tasrina figured it out. Oh, he's qualified only $800,000 house. So that means a month effort Tasrina put on this customer basically is been washed out. It doesn't mean anything to Tasrina
Okay,
because
got
they are
it.
not qualified.
Okay. As for the lender,
Once
does
you get qualified, get the pre-approval. If it's possible, what Tasrina said, get a DU approval, like if the, like then get everything ready. So they were like they feel it's a strong offer.
Yes.
okay.
Sometimes nowadays, even the seller's agent are been asking, where is their down payment? Where is the money?
Yeah, proof of
A
fund.
proof of down payment? Oh, really? What kind of? I mean, you have to show the bank statement.
Yes.
You can show bank statement. You can show if you are taking money from your 401k. Show your 401k. If you are taking money from, the stock, just give your statement like, hey, this is my money. I will cash it out by the time when I'm closing the file. You
Wow.
have to see.
So during this pandemic, it's still like whatever I'm understanding it.
Well,
it's
I'm completely
illegal, right?
with
affecting
Tasrina.
you much.
It is seller's market. It still is seller's market.
So only thing changed during the pandemic is now there is no physical open houses. It's
I
not.
will come to that, Tasrina. That's my next question. So Tiku, are you done? Or you want
There
to
is another thing. Lot of houses they don't need the approval.
Sorry, you're cutting off.
Sometimes some of the houses they
Tiku,
do
you're
not need
cutting
the
off.
appraisal.
Can you repeat that? You cut
Why
it off.
Can you hear me?
Yeah, I can hear you now. No, Tiku, you're gone
Hello?
again. Okay, we'll come back to Tiku
So
later.
I said lot of houses even on the purchase right now. Oh, hold on a second.
We'll come back to Tiku later. Tasrina, let me ask you this question. Given this time as a realtor, are you taking any precautionary measure when it comes to showing homes? For example, are you using PPE or limiting number of people in open house, or are you more relying on the virtual tour? What's the difference between now and the non-pandemic time?
One of the major differences, before pandemic, there used to be open houses for every listing that would come to the market on the weekend, and they would have a specific time, and buyers or agents would come and see the houses during that time. So that would get in a lot of crowd, and even after that, if the house was vacant or depending on if it's occupied or not, we will make appointments and then go see the house during the weekdays. Right now, those open houses are not taking place. So there are virtual tours. Some agents are doing that. So most houses over the weekend or even during the weekdays, depending on, like I said, if it's vacant, you can go anytime, or if it's seller occupied, there's a fixed timing. But every showing is by appointment. So you have to make an appointment with the listing agent what time you want to go, so that at that time nobody else is coming in, or limiting the exposure with other people. There's usually slots, maybe 30 minutes or an hour for each person. There's a gap. And you go at your specified time. Before going, for any person entering a house that's listed, you have to sign a document which kind of states all the risks and what are the steps you have to take before you go see the house. It could be for the inspectors, it could be for any vendors going to the house, it could be for buyers looking for houses, it's for agents, anybody going to the house, they have to sign that form.
Okay.
That is required by our association.
Okay.
Can you hear me now?
Yes, you can.
Can you hear me?
Yes.
So another point is when you go in, most houses have a sanitization a corner where you have a sanitizer, or some agents I've seen, they even provide you with gloves, mask, and everything. And it's a requirement to wear those to go in. Booties, of course, you have to wear those to go see the house.
And what happens when you write an offer? Like, for example, your client wants to buy, likes a house and wants to buy. How do you write an offer? Do you do all digitally or use face to face, or how does it work right now?
Yes, if sellers or buyers, it can be done over online, anything needed. And right now, you use DocuSign to sign most of the documents. So it is possible to even do a deal by not being even by being here in the state. We have many times we do have houses that the sellers have already moved out; they're gone from the state. So they can sell the house. Everything is done electronically. Even they can get everything signed over mail.
Awesome, that's great. So I know we talked about buyer. I want to a little bit understand about seller. What are the criteria for seller? I mean, how does it work, the process? If somebody wants to sell a house, can you give us a little scenario or a walk through it, the process? How does it work?
You mean to say, for a seller to sell the house, what they should be looking for?
Yes.
So to sell a house in Bay Area market is also like, one thing is pricing the house, having the house priced at the correct pricing. It has to be attractive price point. That's the strategy you need to know. So for that, you need to understand how houses are selling in that neighborhood. Sometimes we do come across sellers who have a preset mind that I want this much, this price, this value for my house. That house sold for in my neighborhood. My neighbor sold a house for this price, so I want that price. But there are factors to consider. The condition of the house, the neighborhood.
Yeah.
Factors affect pricing in a city. It's like school district is a very important factor. So all these factors you have to explain. The seller needs to know these things. Like the value is not only on the size and the how big or how beautiful your house is. It also depends on other factors. So that's a very important factor that a seller needs to understand. Depending on that, you have to price it. So if you price it really high, you do lose out a lot of people. So Bay Area trend, mostly you see either it's priced right or it's priced really low.
Okay.
So it's priced low to attract more people to consider. Yes.
Yeah.
That, when you come in, that's the bidding war. People start bidding. But the main value of the house is actually depending on what's selling, what else is selling in the market. So that's where the appraisal comes in.
Okay.
So appraisal.
Okay. Because what the area is selling, how much is
the house? It's worth 1.5 million. If I look for $1 million, doesn't necessarily mean that it will sell at $1 million.
Yeah, that's true. It factors a lot of stuff like school. Before it was school, I don't know whether school is still a factor right now or not.
We still haven't seen that change. We don't know the impact. That could be an impact of pandemic. Even the work commute would be a factor. So these are some of the unforeseen things that we'll know in the future how that's affecting.
Okay, great. I'm not done with you, but I'll come back. Please stay. Don't go away. Tiku, are you fit? You can hear me now?
Yeah, I can hear you. Can you hear me?
Yeah, I can hear you. So I know you were saying I got cut off. So you want to finish off what you were saying, or should I?
No, I was saying right now, a lot of even purchase, they do not record the appraisal.
Okay. Oops. I think he's gone. Sorry, viewers. I think Tiku is having a little bit technical issue. So I have maybe we should ask you another question. This is for people who wants to buy completely cash. Are they allowed to buy it?
Yes.
Can you hear me?
Oh, you're back. Yes.
About cash.
It can be both for both. So whoever wants to answer, because I think we are almost reaching our time. So because I have allocated some few minutes for the viewers live question. So I might ask you guys 2 more and then I will open the floor for the viewers. So this question could be for any of you. I was asking Tasrina Tiku that for if somebody has a cash and wants to buy a home in Silicon Valley, can that person buy it?
Yes, they can buy it. I can give you an example with numbers. Suppose a house is selling for $1 million.
Mhm.
There are multiple offers on that house. So the highest offer is at $1,050,000, which is based on a loan. And a buyer comes in with a lower offer, maybe $1,020,000 or $1,010,000.
Mm-hmm.
Even though it's 40,000 less, the seller would pick that offer. Usually that's the case.
Mm-hmm.
That's a cash offer. They know there is no, hassle of going through the loan. If you have a loan, it might not even go through. So that risk sellers don't want to take. So if it's a cash offer, if you have cash, that's always an advantage for you to get in.
Yeah, cash you can pay less.
Even though they don't have a credit history, or even though they didn't work in this country, they can buy it under their name.
Yes.
Okay.
Credit score requires for doing a loan, not for the cash.
Okay. That's good to know. What about
You just have to have the source of the fund. They will see the source of the fund.
What about the people, the retired people, like, for example, if they want to buy retirement homes, can they do it? What are the criteria?
For
well, it's the same thing. Like, but one thing is like, if it's your parents,
Mm-hmm.
you can buy a owner occupied house for your parents. Even though you are not living there, you can use your income to get them qualified as owner occupied, as a parents.
Oh, really? You can?
Yes.
So is it like
yes,
like jointly you can do, like you are suggesting a joint? Like we have to add.
Yeah, you can buy as a, let's say you are buying another, you have to be a co-signer with them.
For the loan.
What happens if they don't want a loan? I mean, forget loan.
Okay, in that case, you can be in the title. You don't have to be, but if you want to, you can be in the title.
Okay.
From what I understand, your question is, from what I understand, is it doesn't necessarily make a difference if that person is retired or not. What makes a difference is if you have the money to buy that house, if you want to take the loan. So that's where we're differentiated.
Okay, got it. Okay, good. So I'm not sure this is anybody's question. So what do you guys think about 15 years fixed? Is it good, bad?
It's very good. You always get the lowest rate, but the thing is like your payment is higher.
Okay.
So you'll pay it off faster. You get lower rate, so your payment goes higher.
Okay, that's great.
So if a 30-year loan, your payment is 3,000 over there. Like if you get a 15 years loan, maybe your payment is 4,500.
Okay, great. Monthly payment will be okay. Awesome. So, do you think the rate will go down anytime sooner?
That I don't. It's very hard to say. That's a question like, do I know the Tesla stock is going to go up more or less?
I mean, what's the prediction? What do you think? Like,
the prediction is it might go lower.
Lower, okay.
It might go lower, but then it might, let's say, they are thinking about the second wave and all those things, right? So let's say nothing happened, if it is under control, it might go up. But pretty soon, so far right now, the way the train is going down. So let's say after 15 days, it might change. No, things are getting better. So let's go up. Let's go up. It can happen too.
Great. So in case
like most of my customers, they are like they are starting their process. So maybe they are not locking the loan. So maybe they are saying like, let's lock in as it goes. We might lock on the 3rd week, maybe after 2 weeks. It's like that.
Okay. Oh, great. Is that same thing applies for Tasrina when selling the house? Is it like good time to buy right now or sell?
Like I said, like if you ask me, it's kind of a personal decision, right? So depending on the situation, you want to like you're gonna decide if you want to buy or sell. It's different individual will have different situation, but given the market, what I can tell
It's
you is
big case scenario.
you know, like summer usually you see more houses in the market.
Uh-huh.
Then after that, with fall coming in, the houses start slowing. The housing market kinds of inventory is less. One of the reasons is school timing, because people want to sell before the school year starts.
Yeah.
Settle down by then. So again, when the supply will start reducing, we always see the trend of prices going up a little bit. Prices starts going up. So in that
In summer.
yeah, in that sense, right now there are more inventory than there was before. So for, for
Okay.
more inventory before, in the sense that when the pandemic started, from that time on, now it's more inventory. So it's more choices for buyers.
Okay, great.
If you keep waiting,
One thing, Tasrina and Chico, since school is everything online due to the pandemic, don't know when it's going to open. Everybody's working from home. Still, that comes to a factor on when people buying a house or refinancing or selling. Does it matter? I mean,
what the timing right now
yeah,
with the pandemic,
pandemic.
you know, impact of that. I see more people, maybe sellers are a little bit holding back to sell, but maybe they're waiting for shelter in place to go away. But you know, when they see houses are being sold, like I said, more sellers are coming into the market. But from the buyer's perspective, even at the beginning of the pandemic, I have done virtual tour for open houses. I've seen like 10 people in my virtual open house.
Wow.
Seen people writing 8 offers for a house. I'm talking about beginning of April. You know, even at that time, I didn't see things slowing down.
Okay. Just wait for a few minutes, Tasrina. I'll be coming back to you. This question is for Tiku. Do you see more refinancing now due to pandemic?
Yes, huge. Refinance is like, driving everybody crazy right now. It's lot of refinance, lot of. And the problem is having is, lot of lenders, like, they are short of staff. So too many loans, less people are working. Even every office, even some of the underwriters may be working from home, right?
Oh, yeah.
So, and you cannot really, even in our company, we say like anybody, so we give announcement like, if you want to come to the office, you can come. If you do not want to come in, you can work from home, or if you do not want to work, do not work. So there's nothing you can do about it. That's the
Okay.
situation. So we have to work a lot. Like we are working more than other times. Like me, I'm working way more than like regular time. Because before, like so right now I have to be on my file. Like, okay, it's been submitted. Disclosure went out. This, that, like every step of it. So because if I do not pay attention right now, things slow. Maybe other file will get in front of me. There is so many files right now.
Okay, great.
Really
So great. That wraps up question from my side. Before we finish, I would like to open up the floor for our audience for the next 10 minutes. For those of you watching on Facebook Live, please send any question you may have in the comment. Okay, our first question came, can you share some thoughts on the available
loan option.
loan option?
5% down on FHA. Okay, so on FHA loan, minimum required down payment is 3.5%. Minimum 3.5%. That's the requirement for the FHA loan. So if you put 5% down, but FHA loan, there is some positive things, there is some negatives. So there's a pros and cons in it, like any loans. So FH loan, yeah, you can put lower down payment. Your
What is
credit
it
can
like?
be less.
Is it like first time loan?
It's a federal housing authority. It's a federal housing loan.
Is it
Basically,
for first time buyer
there's
only?
basically there is a MI. Huh?
Is it for first time buyer only?
Pardon me?
FHS loan, or it's for everybody?
No, it doesn't matter.
Okay.
Not for investment property.
Okay.
So it's kind of for the owner occupied.
Okay.
So they can do that. But the loan amount has to be in our area. The loan amount has to be 765. You cannot go more than that in FHA loan.
Okay.
Okay. So even in 5% down, if you put it in right now, the loan amount has to be 765.
765. Okay. So you are saying it's not mandatory to put 20%. It can be 3%. Can it be 0%?
It can be 3.5%. You can do there is no 0% loan.
You can.
It could be 5%. It could be 10%. It depends on the loan amount.
Okay, but
And
no
the
0%, right?
No
0%.
Okay. Okay.
Now, one point from a realtor's perspective, I see that if you have the more down payment you have, the better chance of you being able to buy fast. Like you have better negotiation power.
Okay. Great. Right. Next question. What is the current interest rate without any closing cost for the primary buyers?
So if it's under, I saw the question.
Okay, great.
Rifat Anis. So basically, the rate is, I would say, less than 3 without any closing cost. 2.8, 2.875, somewhere in there. No closing cost. No one has to be 510, under 510. So if it's 510, more than 510, in that case, 510,000, in that case, I would say rate is around 3, approx.
Okay.
3 or less, you can say the payment for 30 year. Okay. If you go 15 years, that's going to be less, 2.6, 2.5, 6, around 6, 7, someone there. It depends on the, loan is like, I know this is a very common question everybody asks, what would be the interest rate? So interest rate really depend on the FICO, LTV, and all those things. But that's pretty much the rate, around less than 3, under 510.
Okay, great. Next question, please.
That's something. One thing I want to point it out, if you see any bank's rate, they are not less than 3. This is a special program. We are signed up with one of the wholesale lending. We are getting that pricing.
Okay, our next question.
I'm telling you based on CalCost pricing.
Okay, thank you, Tiku. Our next question is also some guidance factors to concern for the first-time home buyers are highly appreciated.
So regarding regarding if you want to buy from that perspective, would be plan it out, have your pre-approval done, do your shopping for loan lenders rates, whatever you want, and then have a good lender working for you, have the that one absolutely decided, and that way you're ahead of the game. Also, like find out what price point you're comfortable with, depending on how much you want to spend on buying that real estate and which areas you want to buy in. And given the current situation, you cannot walk into any open house. So it's always good to work with the agent. You decide who you want to work with. As you have to have, the agent needs to take you into a house and you have to sign documents. Agents wouldn't just let anybody walk in right now, given the current situation. So you need to do your research and then figure out all these factors, like who you want to work with, which you have a good realtor working for you, have a good lender working for you. Mm-hmm. It will make the process so much easy for you, save you time, and help you to buy a house in this market, which is like very hard to get in usually.
Great. I think you want to add something? You want to add anything?
Well, so actually we talked about that earlier. So first step is get your qualification ready. How much you can get qualified. So you decide all those factors, like how much you are putting down, what kind of money access you have,
Mhm.
right?
Mhm.
So then you know that is your goal. So that much you can get qualified. Then
Mhm.
you can agent will show you the house, all those
Mhm.
things.
Mhm.
And there's various programs. Actually, finance, if you are talking about loans, financing has so many options, lot of different options actually. It
Mhm.
depends on the situation. But that's why you need to get a pre-qual first. You know how much you can go for. Then you talk with your realtor.
Okay, great. Thank you, Tiku and Tasrina. Viewers, do you have any more questions? Okay, great. Thank you, Tasrina and Tiku,
Thank you.
for before we finish today's show. I'd like to give Tasrina, Tiku an opportunity to provide any closing thoughts. I'm going to start with Tasrina.
Well, like I said, even for first-time home buyers or somebody considering buying a second home, because right now, another thing is we are all staying home. So home is very important to us right now. You want that space, you want that open space right now. Like even in my home, we're having this discussion. We need more space. We need structured spaces for working, for studies. Since everything is based on our home, it's an important part of your life. And given the pandemic, it's even more important. So to help you get into this step of having your home, think wisely and like get to work. This is just like a process that you want absolutely planned out, so that it's a smooth process for you. It's a great transaction for. It's a great experience for you. You don't want to buy a home with a bad experience because it's a memorable thing for you, right? So work with somebody who would help you to give you that experience.
Thank you. Thank you, Tasrina. Tiku, do you want to add anything?
So, well, I want to add a couple things. One is, I would say, anybody who's renting right now,
Mm-hmm.
renting, the money is basically you are throwing to the drain, like throwing in drain. So basically, you always we are comparing. Okay, my rent is 3,500. If I buy a house, my
Mm-hmm.
payment will be $4,000. Let's say. So,
Mm-hmm.
but you have to think when you are making the payment of $4,000.
Mm-hmm.
From there, almost $1,000 is going to your principal,
Mm-hmm.
right? So your
Okay.
payment becomes $3,000. So when you are taking at the end of the year, when you're getting the tax write-off, the property taxes, the interest you paid, the money you get, maybe you are getting extra $700-800
Mm-hmm.
like towards you. That means on a $4,000 payment, so basically almost 20, I would say 1,050, like $1,800 is gone. So you
Okay.
basically left with the payment of $2,200. So we don't realize that. We just think I'm making higher payment. So if you have some cash, even if you can do minimum 3.5% down,
Uh-huh.
get to a house. Seriously, because you really need that, because in Bay Area, the situation we've been, I've been in this this area since 98. So it's been 22 years. So we saw lots of ups and downs. So eventually price goes up.
Uh-huh.
Eventually whoever bought 98, today his house is 3 times more. In between there, went up, it went down, but it still is almost 2-3 times higher. Basically, if you do the calculation at the end of your day, so basically you lived in your house free. The
Yeah.
kind of equity you built in the house.
Well,
That's
Tiku,
one thing.
I hate to interrupt. I think our time is way up. So
No
I
problem.
want to really, sorry
And
about
call
it.
us any question and concern. Stay safe.
Sure. Thank you, both of
Phone number is
you,
there.
for closing your points. That wraps up today's topic on real estate during the COVID pandemic. I don't know about you all, but I certainly learned a lot about the housing market and the financial side of real estate through these two experts in the field. Hopefully now all of the viewers gain some new insights about the market. Thank you again to our two speakers, Zina Zaman and Tiku Rahman, who were great panelists on today's topic. I'd also like to thank you to Jamming Entertainment for hosting this critical discussion about real estate today. Lastly, thanks to all the viewers for tuning in on this informative session. Have a great night. Thank you and goodbye.
Thank you.